A very good evening to all the participants of this webinar. And in this webinar, we are going to do Cash Book Part 2. Friends, today we'll be beginning with posting the cash book entries and how the entries in the cash book are finally posted. And when we use the word posting, the word is used in the context of posting in the ledger. So we have seen that the cash column in the cash book is nothing but the cash account, and the bank column is nothing but the bank account. Now, the discount columns are memorandum columns, and memorandum columns are meant to give information and about how much discount is either given or taken. So memorandum columns, the word memorandum means that we are communicating something, and therefore discount columns are memorandum columns which are meant to provide information about the total discount allowed and total discount received. So from the discount columns, whatever information we are getting as the total of the discount allowed and the discount received, it is taken into the discount account, and therefore the discount columns are not balanced because they are not actually accounts, but they are memorandum columns, whereas the cash column and the bank column are the accounts. So the distinction between account and memorandum is being made here, that an account would be balanced on both the sides. An account would have the trappings of an account where we have entries on the debit and the credit side, and then both sides are balanced and the carried down amount is brought down into the next period. But as far as the discount columns are concerned, they are not working as accounts. They are simply giving us information how much total discount is allowed and how much total discount is received when we total up the discount column entries. And so therefore it is just a sort of a memorandum column. Now, as far as the debit side columns or the left side columns of the cash and bank are concerned, they are indicative of receipts of the cash into the cash account or the receipt of any check or cash into the bank. Therefore, whichever amounts are debited in the cash book should be put to the credit of the account in respect of which cash or check has been received. You know, whenever we receive a check or cash, we receive it from somebody. So whomsoever has given us that cash or check, on one hand we debit the cash book because we have received it. On the other hand, we credit the account of that person who has given it to us. For instance, in the cash book given above, and the example given above, we see that 175 rupees have been received for sale of goods. Now let's say if 175 rupees have been received for sale of goods, if we want to post this amount, for posting, this amount is credited to the sales account in form of the entry buy cash 175. It is being debited to the cash account but credited to the sales account because this indicates the sale of rupees 175 rupees in cash. We have also seen that Mr. Varsi has paid rupees 450 and Mr. Varsi has been allowed a discount of rupees 35. So therefore, Mr. Varsi has discharged a total debt of rupees 485, which is 450 plus 35. Mr. Varsi has paid 450 and 35 was the discount. If the discount was not allowed to him, he would have had to pay rupees 485. So rupees 485 was the debt that gets discharged by making a payment of 450 after getting a discount of 35 as far as Messrs. Varsi is concerned. So in this situation, what we will do is that in the account of Messrs. Varsi, we will be posting on the credit side, and on the credit side of the account of Messrs. Varsi, we will write by cash, which means that cash account has been debited by 450, and by discount, which means the discount account has been debited by rupees 35 in our books, which therefore means that we have allowed a discount of rupees 35 to Messrs. Varsi. So in case we don't want to write cash and discount separately, we can write sundries also if it is a one-off transaction. In the cash book, all the payments are recorded on the credit side, as we have seen. The particular column shows on what account or for what reason the payments have been made, because that is mentioned in the particulars column, the column named particulars, because we are making a reference in the particulars column whenever we are making a payment. In the ledger accounts concerned, the amount is put on the debit side. For example, the cash book shows that a check of rupees 330 has been issued to Messrs. Ratan and Company. If a check has been issued of rupees 330, it is showing in the cash book on the credit side that a check has been issued for rupees 330 to Messrs. Ratan and Company, and also that they have allowed a discount to us of rupees 20. So therefore, by paying rupees 330, we are discharging an obligation or discharging a debt of rupees 350, 330 plus 20. So in the account of Messrs. Ratan and Company, the posting would be in the account of Messrs. Ratan and Company, we will be doing a posting where we will write on the debit side to bank 330. That means when we write to bank, which means that we are debiting Messrs. Ratan and Company account by 330 and we are crediting our bank account by rupees 330 because we have made a payment from our bank account to Messrs. Ratan and Company, and we are debiting Messrs. Ratan and Company account by rupees 330, and we are also debiting Messrs. Ratan and Company account by discount amount of rupees 20, and in return we are crediting the discount account, which means that we are receiving some discount of rupees 20. So the rule is like this. Of course, for bank and discount, we can write sundries also sometimes when the small amounts are concerned. The rule thus develops like this, that from the debit side of the cash book, credit the various accounts with their respective amounts, as we have done here. Including the discount that may have been allowed. And from the credit side of the cash book, which is the payment side of the cash book, the posting will be to the debit of the accounts which are mentioned in the particulars column. To read this again, from the debit side of the cash book, whichever accounts are mentioned in the particulars column there, we'll be posting to the debit of those accounts. Credit of those accounts. And from the credit side of the cash book, the posting will be to the debit of the accounts which are mentioned in the particulars column, as we have done out here also. When we are writing buy cash, so what we are doing that when we write buy cash, it means that we are crediting Messrs. Varsi account. Why we are crediting Messrs. Varsi account? Because Mr. Varsi has paid rupees 450 to us, and we have allowed a discount to him of rupees 35 rupees. So we are debiting the cash account. So we are taking the entry from the debit of the cash account. When we start from the debit of the cash account, we land up crediting Mrs. Varsi account. And when we start from the credit of the cash account, we land up debiting the party written in the particulars column. So therefore, that is a summary of this rule, in case we would like to have a summary. But otherwise, general logic also helps us to understand this and do it. The total of the discount columns on the debit side is debited to the discount account, and the total of the discount columns on the credit side is credited to the discount account. So now we come to petty cash book. Now in a business house, a lot of small payments are also made. Like if there are telegram has to be sent, or of course nowadays these telegrams are not there. If we say telegram, it means telegram app. But many small payments are usually made in many business houses, like taxi fare for somebody, cartage amount, for carrying item from one place to the other. So now if all these payments were to be recorded in the cash book, our cash book will become very, very heavy. So instead of recording all these small chiller payments or chiller receipts, what we call, we need not write them all in the cash book, because that would become very heavy. And the main cashier would be burdened with work writing small amounts in the cash book. Therefore, it is quite usual for firms that they appoint a person as a petty cashier. And this task is entrusted to maybe more than one cashier also. Their task is to make small payments, say below 200 rupees. Of course, he will be reimbursed for the payments which he is making. And later on, an analysis is done, and the respective accounts are debited. So at the time of making payments, small payments, the petty cashier just makes the payments and keeps a record of it. So it is very convenient to entrust a definite sum of money. For example, a sum of money can be given to a petty cashier, let's say 200 rupees, 1000 rupees, 2000 rupees. And this amount is given to him in the beginning of a period. And in order to reimburse him for payments made at the end of that period, a definite sum of money is given to him. Thus, he will have again the fixed amount in the beginning of the new period. So an amount is fixed, let's say 2000 rupees. At the beginning of every new period, his balance would be, recompensated and reimbursed so that the balance with him will remain 2000 rupees or whatever the fixed amount is. We say that we have given an impressed cash to him. An impressed cash balance is, replenished at the beginning of every period. For example, if I am the petty cashier and I have been given 2000 rupees, let's say for 15 days time, and at the end of 15 days, I am left with 1200 rupees because I have given small payments to many parties, and ultimately I'm left with only 1200 rupees because I have spent 800 rupees. So what will happen is that at the beginning of the new period, I will be given 800 rupees more so that my balance of 2000 is replenished. So this replenishment of the balance is made at the beginning of every new period. Now this system is very useful, especially if an analytical petty cash book is used. Now an analytical petty cash book has one column to record the receipts of cash, which is only from the main cashier, because receipts are coming only from the main cashier, and this petty cashier does not receive any cash otherwise, and he only makes the cash payments. This has to be remembered that petty cashier will not receive any cash except from the main cashier for the replenishment of the balance. And this book has one column for receipt of cash and the other columns also to record the payments of various types. So there could be more than one column for various types of payments. The total of the various columns show why payments have been made, and then the relevant accounts can be debited because the various columns show the relevant account in respect of which that payment has been made. Because ultimately we will have to debit those relevant accounts. Now here we have to take care of a few things. So number one, the amount which is fixed for petty cash should be a sufficient amount for the likely small payments for a relatively short period of time. Say the short period of time could be 1 week or 15 days, fortnight. Number two, the reimbursement which is made, it should be made only when the petty cashier makes a statement showing the total payment supported by vouchers, that is the documentary evidence, and this reimbursement should be limited to the amount of the actual disbursements made by the petty cashier. Supposing he has made disbursements of 450 rupees and he has submitted vouchers in support of those payments in form of a documentary evidence, then that much amount for which he has presented the vouchers can be replenished to him or disbursed to him. Now the vouchers which he is submitting, he should file them in a certain order, let's say the order of the chronology. No payment should be made without proper authorization of the payment. It's not that if small payments are being made, all those payments can be made without the authorization. It's not that. Also, payments above a certain specified limit should only be made by the main cashier. So there is an upper limit to the amount that can be paid from the petty cash. Now it's very important that petty cashier will not receive any cash. He will only make small cash payments, and except that he will receive cash for reimbursement or replenishment of his cash balance or the impressed cash balance. In the petty cash book, the extreme left-hand column will record the receipts of cash. The money column towards the right hand will show the total payments for various purposes. So extreme left hand column is the receipts of cash. Money column will be towards the right hand, and it will show the total payments for various purposes. And we should also allow a column. We should also allow a column to be provided for sundries to record those payments which are not frequent payments. The sundry column is analyzed, and at the end of the week or the fortnight, the petty cash book is balanced. The method of balancing is the same as for a simple cash book. So a certain amount of time period is selected for which the petty cash book will work, and after that particular time is over, say a week or a fortnight, the petty cash book difference will be written on the correct side, and thereby the petty cash book will be balanced. And of course, the amount carried down will be taken as the brought down amount at the beginning of the next period. That is what we mean when we say it is balanced. Now in illustration 4, certain impress system, under the impress system, certain payments that are being made. On the basis of those payments, a petty cash book is required to be prepared. So we can see a petty cash book here, and in this petty cash book, on the extreme left hand side, we can see a column which says that receipts, which shows the receipts, and it is necessary to kindly go through all these columns very carefully, because on the extreme left hand side there is a column called receipts, and the receipts are, let's say, 100 rupees. And then there is a date column, and then there is a voucher number column. Because for every payment, a voucher is to be prepared and kept as a documentary evidence. And then there is a particulars column, which is showing that when we are making a payment from the petty cash book, we are crediting the petty cash book, and we are therefore debiting some other account. So that account which we are debiting, that is on account of which the payment is made, we write that as in the particulars column. So for example, on January 2, under voucher number 1, when we say by conveyance, which means that for the reason of conveyance, we are making this payment, and therefore conveyance account, where the petty cash book is credited and the conveyance accounts would be debited. So when we say by conveyance, the payment is being made for conveyance. When we say by cartage, the payment is being made for cartage through the petty cash book. So here, when we write the total of the payment, that we divide that payment into different categories. So by categorizing the payment, it is being categorized here also in the particulars column, and it is being categorized here also in the respective column. So when it is conveyance, we write in the conveyance column. If it is cartage, we write in the cartage column. 2 rupees 50 paisa is here. Whatever it is, we make those so many columns so that we can ultimately take the totals of those columns to understand what are which all payments are being made here. So as we can see, the payments are being made here, and therefore we are making this entry here. Whereas the receipts are being entered on the extreme left column. 100 rupees is received here on January 1. And so 100 rupees in cash is received here. So we have made an entry over here. Then on January 2, a payment under voucher number 1 of 50 paisa is made for conveyance. And similarly, on January 2 itself, under voucher number 2, a cartage payment is made for rupees 2 rupees 50 paisa. And similarly, all those payments are written here. And finally, the totals are thereby taken of all the columns. And the balance out of 100 rupees is 40 rupees. And therefore, this petty cash book is balanced by this remaining amount of 40 rupees. And this 40 rupees finally taken as balance brought down. It is mentioned here. And it is a balance brought down. And then to complete 100 rupees, we pay 60 more rupees to the petty cashier. And therefore, this is a receipt of 60 rupees made to the petty cashier. Now, what are the advantages of having a petty cash book? One advantage is that we are saving the time of the chief cashier. Otherwise, chief cashier would be busy writing very, very small amounts. We are also saving the labor in writing of the cash book and posting into the ledger every small amount. Because here, we'll not post every small amount, but rather we'll post a consolidated amount. And in this way, we get more control over small payments, because too many small payments can lead to too much payment. So we are able to control the small payments by maintaining them here in a petty cash book. Now we come to the posting of the petty cash book. In the ledger, a petty cash account is maintained, and when an amount is given to the petty cashier, the petty cash account in the ledger will be debited by that amount. For example, here 60 rupees is being given to the petty cashier. So the petty cash account in the ledger will be debited by this amount. Now, each week or fortnight, the total of the payments which are made is credited to this account. So when the petty cashier gets this payment, this account is debited, and when he makes any payment, this account is credited. The petty cash account will then show the balance in the hand of the cashier at any point of time. On demand, he should be able to produce the cash for counting, in order to be able to check whether he's showing every entry in a correct way. At the end of the year, the balance is shown in the balance sheet as part of the cash balance. So the petty cash book balance is added to the normal cash balance while preparing the balance sheet at the end of the year. Of course, the payments which are made must be debited to the respective amounts, or debited to the respective accounts rather, as shown by the petty cash book. For this, two methods may be used, because when we are making payment, the payments are being made of the respective amounts on account of the reason which is mentioned there. So we have to debit those amounts in the respective accounts. Now, for that, two methods are used. The first method is that from the petty cash book, the total of the various columns are taken, and those totals may be directly debited to the concerned account. So as in this example, let's say the total of the conveyance is 650. So this 650 will be debited to the conveyance account in the ledger. The second method is a journal entry may first be prepared on the basis of the petty cash book. Instead of making straight away posting into the ledger, first we make a journal entry on the basis of the petty cash book, And by journal entry, we are debiting the accounts shown by the various analysis columns. These are called the analysis columns here, like conveyance, cartage, stationery, postage and telegram, wages, sundries. All these are called analysis columns. And in the second method, a journal entry is prepared debiting the account shown by the various analysis columns and crediting the total of the payment of the petty cash account. And once the journal entry is made, then it is posted to the ledger. So there are two methods. Either we post directly to the ledger from the petty cash book, or we make a journal entry and then we post it. For illustration 4, the journal entry and the relevant accounts would be like this. We are making journal entry here. So we are writing that on January 6, we are debiting all these accounts, and for that we are making a debit of all these accounts in all these accounts, and we are making credit to the petty cash account, because crediting by crediting the petty cash account, what we are doing is that we are saying that we are paying petty cash out of the petty cash account, and by debiting these various accounts, we are saying that we are giving this cash for these reasons, and therefore once the cash goes out into these accounts will in turn go into the profit and loss account or the trading account, and that will help us to prepare our financial statement. And here we are also writing in the respective narration that being the analysis of the petty cash book for the week ending January 6. So here we are saying that this is an analysis of the petty cash book, and then we are also seeing an entry here, a journal entry by which entry for cash which is handed over to the petty cashier by the main cashier. So when that is done, the cash account of the books is credited and the petty cash account is debited when this 100 rupees is handed over to the petty cashier by the main cashier. You can see that after making this journal entry, this posting is being made in the petty cash account in the ledger. Now we come to entries for sale. We were doing cash book entry. Supposing sale is made through the credit and debit cards, then how do we make entries for that? Nowadays, sales are made through the credit and debit cards, which are issued by almost every bank in India, and some banks issue it directly, and some banks issue it in collaboration with some other agencies. So these are the list of some of the cards which are popular cards. So what is the procedure for issuing the cards? Procedure is, because firstly, when we want to understand the accounting which is done, first thing that we have to understand is how these are issued. So a small plastic card, which is called the credit card, is issued by the bank to a customer. Now, after verifying his credibility as to how much he can make the payment of, the debit card is issued by the bank to any customer who has an account with the bank, and he has to maintain a minimum balance. Now, generally, the card will contain an embossed 16-digit number and the name of the card holder also, and there are some other entries also. Generally, bank will charge an annual fees or annual subscription fees for the card from the credit card holder. Although for the debit card no fee is charged, though some banks do charge a nominal fee. Now, when this card holder wants to buy something through the credit or the debit card, the seller will either fill a form, generally in triplicate, the details of the goods with the amount of the sales, and uses the embossed card with the help of the credit card machine to print the data on that form. Also, the customer has to countersign the form. One carbon copy of the form is given to the customer. This was the old system. Now, of course, the system is more simplified. The card machine, the card is entered into the machine, and the payment which is required to be made is entered there, and that when payment is made and receipt is issued from the machine. It's called the POS machine also, the point of sale machine, POS. Then the seller will sum up all the different amounts which he has sold, and he will submit a statement of all these amounts which he has received from by way of sale. He will submit a statement to his bank, and then the amount is credited by the bank to the seller's account, and is debited to the account of the bank or the company issuing the credit and debit card. So thereby the amount is credited by the bank to the seller's account, which means it's taken out of the seller account and paid to the bank or paid to the company issuing the debit or credit card. The bank who has issued the card charges some commission for each transaction, which can vary from 1% to 4%, and it is charged from the bank. So, rather, it is paid to the bank, because bank is charging this commission from the seller of the goods. Bank sends a monthly statement to the card holder. In case of debit card, the account is immediately debited to the card holder's account, whereas in the case of credit card, the card holder has to pay the amount in full or in part by a certain date. Now, how do we do the accounting for the credit and debit card sale? From the seller's point of view, or in the seller's books, this type of sale is equivalent to a cash sale. He is doing basically a cash sale. So the commission which is charged by the bank will be treated as a selling expenditure. So the sales account will be credited and the bank account will be debited for the payment which is received, and the bank account would be credited and the commission account would be debited for the commission that is paid to the bank by the seller. Because the bank is going to charge 1% to 4% commission on every transaction. Now, in the illustration 5, let us look at this illustration, and here certain transactions are given here, and we are supposed to enter the transactions in the cash book, which has discount and bank columns, and the checks are going to be first treated as the cash receipts, as we had seen earlier also. So first of all, 2016 March 1, we are starting from March 1 and going up to March 30. So these transactions relate to the month of March in 2016. So first thing is that there is a cash in hand of 15,000 rupees. And when there is a cash in hand, we are making a brought down entry of 15,000 rupees here in the cash book. You can see the cash book having various columns. This is a cash book having discount column, the cash column, and the bank column. So this is a triple columnar cash book. And on March 1, the balance brought down is 15,000 rupees. And thereafter, on March 1 itself, there is an overdraft in the bank of 500 rupees. So for the overdraft, we are writing this 500 rupees payment side because there is a debit side of the cash book and there is a credit side of the cash book. On the debit side of the cash book, we are writing all the receipts, and on the credit side of the cash book, we are writing all the payments. So when we are writing it in the bank column, we are showing that the cash book is there is a balance brought down or the overdraft balance in the bank. So the bank is credited with the overdraft balance here, which is a balance brought down. The cash brought down balance is debited in the cash book here, and in the bank column there is a overdraft, so it is credited in the cash book in the bank column. Now then there is a cash sale which is happening at 3,000 rupees. So cash sale, for the cash sale, the cash book is being debited by 3,000 rupees because the payment of cash is received here, and the sale account would be credited. So two sales. Thereafter, there is on March 3, an amount of 3,400 is paid to Sushil Brothers by check, and on the same date, 100 rupees discount is also received. When we are paying to Sushil Brothers, we are receiving a discount here. The check payment is 3,400 rupees, 100 rupees is the discount. So 3,400 rupees we are putting it in the bank column because the check has been issued. So our cash book is being credited for 3,400 rupees, and discount account. So cash book is also credited by this 100 rupees, whereas the discount account will be debited here, because what we are doing is that we are paying to Sushil Brothers and we are receiving the discount of 100 rupees. So this discount of 100 rupees is the discount which is received by us from Sushil Brothers, because we are making this payment here, and therefore this is a discount which is received, and ultimately therefore cash book is we make a credit entry in the cash book of 100 rupees. When we say credit entry in the cash book, which means that a discount is being received here. This 100 rupees entry will be ultimately debited to Sushil Brothers also, because Sushil Brothers is said to have given us this discount. So 3,400 plus 100 rupees, the total debt of 3,500 is discharged by making a payment of 3,400 rupees by check and getting a discount of 100 rupees, which is mentioned here. Now, we make a sale through the credit card of 2,800 rupees. So 2,800 rupees sale is being made. So sales account is credited and we get the payment in our bank of 2,800 rupees. So in case of a credit card or the debit card, we get a payment in our bank here. Now then, we received a check from Srijan 6,200. We are saying that whenever we receive any check, we first treat it as cash receipt. So 6,200 rupees is entered here. We have received it as a payment. A check has been received from Adit, and therefore we have entered in the cash, because initially when a check is received, we entered it in we take it as a cash receipt. Thereafter, what we are doing is that this 6,200 rupees, we are endorsing this particular check in favor of Adit. We got this check from Srijan and we are endorsing it in favor of Adit. So this Srijan is here 6,200, because we are writing the receipts on the left side. So this Srijan receipt is 6,200 on the left side, and since we have made endorsement to Adit, so here Adit endorsement is there on the right hand side, which indicates that actually we have made a payment to Adit for the 6,200 rupees. The payments are written on the right hand side and receipts are written on the left hand side. Now then, deposited into the bank 6,800 rupees are deposited into the bank. Obviously, we are seeing this 6,800 rupees cash deposit is being made here in the bank, because 6,800 rupees is written as a payment here, and here also a contra entry is being made. The cash is taken 6,800 rupees, and in terms of contra entry here, and this cash is deposited into the bank, and this is a payment, and this is a receipt into the bank here, 6,800 rupees in the bank column. And since it was coming from the cash account, so cash account it has been credited, and bank account is being debited. So there is a contra entry here, because when we take out the cash, we are writing 6,800 into cash column, and when the 6,800 rupees is deposited in the bank, we are writing it in the bank column on the other side, and therefore there is a contra entry here. Now, we have received a check from Aviral and deposited the same into the bank by allowing discount of 50 rupees. So a check has been received from Aviral for 3,600 rupees, and we have deposited the same into the bank. So we can say that 3,600 rupees is mentioned here it is straight away entered into the bank account, and 50 rupees discount is also adjusted, because we have given, he was maybe supposed to pay us 3,650. We say, okay, we are giving you a 50% discount, 50 rupees discount. You pay us only 3,000 rupees. So Aviral paid us 3,600 rupees. And when Aviral gave this check of 3,600 rupees, we have straight away put it in the bank account. So instead of bringing it to our office, we say that we received the check from Aviral and deposited. So both the things, by receiving the check, as soon as the check is received, it is deposited into the bank. It is not kept in the office. Therefore, no need for contra entry here. You have to simply deposit the check into the bank account, and that is what has been done here. That under the bank column, this 3,600 rupees is written on the debit side of the cash book. That means that cash book is debited by this amount, and this amount has been received into the bank account. Now thereafter, Adit informed that Srijan's check is dishonored, because Srijan's check was endorsed in favor of Adit. We are writing here that received check from Sijan 6,200. Now this 6,200 check was endorsed in favor of Adit. But now Adit has informed that Sijan's check is dishonored for 6,200. And now cash is received from Sijan and the amount is paid to Adit through own check. Now what is happening is that Adit informed that Sijan's check is dishonored. So cash is received from Sijan. Since Sijan's check was dishonored, Sijan has paid us cash, and that cash we have paid to Adit through our own check. So 6,200 rupees, as you can see, it is written in the bank column. So we are paying this 6,200 rupees through our check, and here 6,200 rupees is entered in the cash column because the check which was endorsed is now dishonored. So when a check which was endorsed earlier to Adit is dishonored and it was a Srijan's check, so we will have to debit our cash book because we have received this amount from Srijan in cash. Srijan's check was dishonored, so Srijan gave us the 6,200 rupees and of cash here, and we have made a payment of 6,200 rupees by our own check to Adit. Because Adit told us that, oh, you had given us the 6,200 rupees, you had endorsed the check to us. Because what had happened was that the 6,200 rupees, as you can see here, and there is a 6,200 rupees entry out here also. So here, this Adit payment is being made to Adit of 6,200 rupees. How this payment is being made? We received a check from Srijan. When we received a check from Srijan, we entered in the cash column. Then we endorsed this check to Adit, and therefore, in here we made an entry to Adit because we have endorsed this check to Adit, and it is still cash entry because Adit has not paid it into the bank so far. So therefore, 6,200 rupees is a cash payment because although it is a check payment, endorsed check payment to Adit. Now, Adit came to us and told us, oh, this check of 6,200 rupees you had given us, but this has been dishonored. So what we do is that we tell Srijan, please, your check has been dishonored. So Srijan said, okay, I'm giving you this cash. So Srijan gave us this cash of 6,200 rupees, and we use this cash to make a payment to Adit of 6,200 rupees by our own check of our bank. Now there is a sale through the debit card, 3,200 rupees. So this sale, 3,200 rupees, made in the bank column because we received the payment in our bank account, and we withdraw 1,800 rupees from our bank account, and we withdraw 1,800 rupees from the bank account, we bring it to the cash account. So there will be a contra entry will be required there. So 1,800 rupees here and 1,800 rupees here. This 1,000 rupees is 1,800 is the receipt of cash in the bank, and this 1,800 rupees here is the payment of 1,800 rupees from the bank account. That means it is a withdrawal of the cash of 1,800 rupees from cash account rather, because here, although we are writing here in the bank, we are writing here bank as part of the contra entry. So, but however, we are seeing here 1,800 contra entry, which means that this amount which is written as cash, the cash book is being debited because 1,800 rupees is being deposited, or it is being received into the cash book. Now here 1,800 rupees is taken out from the bank, and here 1,800 rupees is being deposited into the cash. So when we make a payment from the bank, we write it 1,800 rupees, and as a contra entry, we deposit that into the cash book. We are writing under the cash column 1,800 rupees. Apart from that, we paid to Sanchit by check 3,000, and bank charges 1% commission on the sales. So we paid Sanchit 3,000 rupees by check, and here that check is being paid to Sanchit. Sanchit account is being debited, and it is a credit here in the cash book. And for the commission of 60 rupees is paid from the cash book, and commission, it is being debited to the commission account. Whoever may be taking it, but all the commissions go into the commission account, commission received and commission payments. So bank has charged us 1% commission, which comes to 60 rupees on the sales, on the total sales. So we have to just add up the sales and find out 1%, that will come to 60 rupees. Because the total sales that we made, we have to just add them up, cash sales, the bank sales. And finally, we have to get 1% of that, and that will be a commission. Now, if the received check is endorsed to other party on the same day, if we receive a check and we endorse it to the other party also on the same day, then no entry would be required to be done in the cash book. As soon as we receive the check, we endorse it to the other party. So no entry would be made in that case. However, in this above case, posting has been done through the cash column, as the endorsement is done on the next day. We have to be careful that since the endorsement is being done on the next day, so you are seeing here, this is 7th of March, 6,200. The check is being received on 6th of March, but it is being endorsed on 7th of March. If it was endorsed on 6th of March itself, then in that case, no entry would be required here in the cash, and therefore the check would be straight away shown as paid to Adit itself. So we have to remember this particular point very carefully. If the check is received, if the check which was received is endorsed to the other party to whom the check is ultimately given, if the endorsement is made on the same day, then we don't need to have any entry in the cash book in form of receipt of check in the cash and then payment of that by endorsement. Straight away we'll just make an entry of the payment which is going to be made by endorsement here. So in summary, we can say that cash book contains the cash transactions and also the bank transactions. And if it has a separate book column, if it has a separate bank column, it is both a subsidiary book and the cash book is also a subsidiary book as well as a principal book, as we have studied earlier. It is a principal book because it works like a ledger also for the cash account and the bank account. It is a subsidiary book to the extent that entries which are made in the cash book are to be taken into the ledger, ledger being the principal book. Now we can also add a discount column in the cash book, that is always there. And for small payments, a petty cash book is maintained and it is replenished after a certain amount, fixed amount of period. So let's do a few multiple choice questions. So the total of the discounts column on the debit side of the cash book, recording cash discount deducted by customers when paying their accounts, will be posted to the credit of the discount allowed column, or the debit of the discount allowed account, or the credit of the discount allowed account, or the credit of the discount received account. Now here, the discount column on the debit side of the cash book, because when we are writing payments on the debit side of the cash book, we are receiving certain payments. While receiving the payments, we are allowing discount to others. When we are allowing discount to others, it is a discount allowed, and therefore discount is an expense or a loss. So entry would be made to the debit of the discount allowed account. The number 2 is cash book is a type of dash but treated as a dash of the accounts. So cash book is a type of subsidiary book, but it is treated as principal book of account. How it is treated as a principal book? So we have to understand whether basically it is a principal book or basically it is a subsidiary book. So we can say that since in the cash book, the entries which are made in the cash book, the cash book also works like a cash account, and it also works like a bank account, and therefore cash book in its very nature is a subsidiary book, because if the entries are made, they have to be sent to the principal book also, but it is treated as a principal book of account because it is treated as a cash account of the ledger or the bank account of the ledger also. Though it is a type of subsidiary book, because the initial entries are made in the cash book and therefore they are supposed to be sent to the ledger. But the treatment can be made as a principal book because it is treated like a cash account or a bank account. Because when it is treated like a cash account or a bank account, those entries are not sent to the ledger. I mean, duplicate work is not done. So the cash book itself is treated as a principal book in that case. Which of the following is not a column of a 3-column cash book? In a 3-column cash book, there is no petty cash column because there is a cash column, there is a bank column, and there is a discount column. Another question is the contra entries are passed only when double-column cash book is prepared, 3-column cash book is prepared, or when simple cash book is prepared. So as we have seen that contra entries would be required when we either deposit the cash from the office to the bank or we withdraw it from the bank and put it in the cash box. So since we are having double columns there, both the columns, like the cash as well as the bank, then contra entries are passed. So in a simple cash book, no contra entries are passed because there is no bank column there. And of course, in the 3-column cash book, also contra entries can be passed, but the more appropriate answer would be that contra entries are passed only when double-column cash book is prepared. Now the cash book records what? The cash book records all the cash receipts and payments, both. So C would be the right answer. And the last question is the balance in the petty cash book is whatever balance is left in the petty cash book, which is the balancing figure, because in the petty cash book, as we have seen, only the payments are made through the petty cash book. And the balance in the petty cash book will always be that balance which is remaining, which is not so far being paid. So that balance is the cash balance, and therefore, since it is a cash balance, it is an asset. It is neither an expense or a profit. So let us see. Okay, one more question is there. If Ram has sold goods for cash, I don't know why this Ram word is used every now and then, but okay, fine. If the Ram has sold goods for cash, the entry would be recorded where? So if the goods are being sold for cash, the entry, where the entry would be recorded. So in the sales book, it will not be recorded, because in the sales book, when a credit sale is made, then the entry is recorded. And whenever a cash sale is made, then the entry will normally be made in the cash book and not even in the journal, because cash book is a specialized book where entries are made for cash sales. So that would be the right answer. That is, the A would be the right answer in this case. So we have come to the end of cash book, and we'll be moving on to the new chapter or a new unit tomorrow morning. So today it's been quite late in the evening, and we hope that we'll try our best not to delay the proceedings at all. And tomorrow morning, please join us therefore at 7:45 a.m. so that we can start the session at